clear that the growth of U.S. LNG exports has actually been a stabilizer in the world economy. Think what it would be without it. We're now one of the big three exporters of LNG, but it's remarkable how quickly it happened. Your question about demand destruction and fiendishly, what did they say, fiendishly difficult to see and what to expect for the winter. I think, as we see, if it's going to be a cold winter, global prices are going to go up. And, the U.S. is part of a global system, and we'll see the prices here. And even though natural gas is down today, that's a lot higher than it was. That's still a high price compared to what people have been accustomed to.
Dan, it's Dom here. When you look at nat gas prices, and I'm asking as a layperson, as a consumer of nat gas, my home is heated with nat gas, especially in the wintertime. What is it about the U.S. construct or the global construct right now that is keeping those gas prices as high as they were? I remember that the conversation a decade, 2 decades ago with fracking and everything else was that this was going to be the reason why America would be energy independent and that we'd have low fuel costs across the board. Why are we talking about oil and gas inflationary pressures this time around?
Well, Dom, it's true that for a number of years we've had really low prices, and that's why hundreds of billions of dollars have been spent building factories in the United States. What's happened now is that the global supplies are really tight. A lot of this has to do with China, which LNG exports are up 25%. European and everywhere inventories are low because of a cold winter. And of course, we've lost some natural gas supplies from the Gulf of Mexico. So all those things have come together. And whether you're looking at natural gas on a global basis or you're looking at coal on a global basis, there's no give in the system. In a sense, we're seeing a consequence on a global basis of constrained investment going into the energy sector, particularly at a time of rebound. And then you have weather and other things that happen. And that's where you are. I mean, in Europe, the landed price of LNG is 6 times what it was a year ago.
Yeah, it's a massive, massive problem, Dan. So here's a question for you. Is it a coincidence that the price of carbon is also basically at an all-time high or not? And in other words, is it policy choices of decarbonization that are contributing to the unattractiveness of investment in fossil fuels? And if that's all true, then have we basically gotten ourselves into cap and trade, but without the energy rebates that were supposed to protect low-income consumers?
Well, I think that is true, that the capital has been constrained going into investment. And investors, a lot of investors leaving the sector. And you not just look at oil and gas, certainly coal is really starved of capital. And the replacements isn't really there. So there is an imbalance. I think you're getting at this, Kelly, between what the policies and the directions are, and really, in a sense, where investors have been going, and what the reality of demand and supply is. And I think the question I'm hearing around the world in the energy business is this just are we going to see repetitions of this pattern over the next several years whenever we have strong economy? And then, if we get prices high like this, we pay for it in turn with lower economic growth for a while.